Hi guys, and welcome back to CashBright, your guide to investing in an ever-increasingly uncertain financial world. Now, I've been watching the markets and I've come across a rare opportunity to invest in a promising stock in the form of Nikola. Now, Nikola Corporation is an American zero-emissions vehicle company which designs and manufactures electric vehicles such as Nikola 1 and the Nikola 2 electric semi-trucks. The stock hit a high of just under $80 a share not long after the company went public on the Nasdaq under the ticker NKLA on the 4th of June 2020. Now, this jump was emblematic of the surge in tech stocks we have seen since March of this year. Nikola is of course named after Nikola Tesla, and this tentative association to Elon Musk's Tesla was perhaps enough for the stock to explode in early June. However, unlike the Tesla stock, investors that jumped in early have watched in horror as the stock has suffered a fairly steep drop in price from the end of June, and rather unusually during the tech stock surge, investor sentiment has soured on a future-facing tech stock. Heading towards the end of July, the stock price has dipped below $30. The further fall has been caused in part by Nikola selling just under 24 million shares, consisting of public and private warrants. Now, this had the effect of diluting the supply of stock for Nikola and exerting a further downward pressure on its price, as these additional shares were purchased for around $11.50 a share, a considerable discount on the $40 a share at the market price. The company did this to of course generate further funds for its operations, and it shouldn't really have come as a surprise to investors. The company is actually yet to sell anything, and therefore has no revenue or earnings to offer investors to reassure them of the company's financial viability. The company is also a new market entrant and is facing a few years at least of losses before it will be in a position to make a profit. But this more recent dip in price now presents investors with an attractive buying opportunity. You know, the world has changed since lockdown, and governments around the world will be looking to capitalize on the reset to implement their eco-friendly, zero-emission solutions to transport and freight logistics. This is where Nikola could fill a gap with their zero-emission electric trucks, which, combined with future, stricter carbon emission regulations, could be more attractive to fleet operators and large logistic firms than the more traditional large goods vehicles we are all familiar with. Although it should be stressed that of course Nikola is a real minnow compared to Tesla and presents a greater risk as a result, it is well placed for what many predict to be a real shift away from traditionally fueled vehicles in most Western economies over the next 10 years or so. Analysts already see the stock as worth around $54 a share, so this recent dip in price really is a fantastic opportunity to buy a stock on the cheap. Well, that's my recommendation, but what do you think? Is this stock a buy? Or does it represent too much of a risk in light of the state of the economy and the lack of any revenue generated by the company? Do let us hear your thoughts in the comments below. Thanks for watching. If you found this video to be helpful, please leave a like and don't forget to hit the subscribe button. And until the next time, stay sharp, stay hungry, and stay cash bright.